In this video, we're going to talk about top investing rules and quotes from Joel Greenblatt. Stay tuned. Hey traders, a very warm welcome to you. So this is for the investors of you out there. Some rules and some quotes from Joel Greenblatt himself. Now the first one is a little bit funny. Okay, I've paraphrased a bit and I've said have an idea of what you're looking for. What he actually said was this: choosing individual stocks without an idea of what you're looking for is like running through a dynamite factory with a burning match. You may live, but you're still an idiot. So what he's trying to say there is, listen, have a strategy for what you're looking for. Have a filtering process, have just a system so you know what you're looking for. Are you looking for some kind of value? Are you looking for PE ratio? Are you looking for momentum? Are you looking for growth? Are you looking for turnaround? Are you looking for management? What is it? What is the thing you're looking for? If you're just picking based on different criteria each time, it's like running through a dynamite factory with a burning match. Or if you're just picking just because it feels good, again, you're not going to get away with it. You might get away with it, as he's saying, you know, you're still going to live potentially, but you might not. You might get blown up, but you're still an idiot because eventually you will get blown up. So the point is having a strategy. It's the same, isn't it, guys, when you're investing or if you're trading. Whatever you're doing, you have to have a good strategy. So the second thing he said is work out the value of something and pay less. So his investment ethos is you decide on the value, and again, that's going to be subjective. You're going to have an idea of what you consider as value, whether you're using income, whether you're using earnings, whatever you're using to value your investment, and then pay less for that investment than the valuation. That's his strategy. That sounds very sensible. Now, obviously, in some situations in the market shares are undervalued based on their valuation because of something coming up or purely because of price action, because it's been depressed by the market or whatever it may be. So this makes sense to have an idea of value and then aim to pay less for it. And this is actually something very common with all the great investors, isn't it? People like Buffett, etc. They always say, hey, you know what? I like to pay less than I think that something's worth. Now, of course, the kind of variable there is what is the value. Sometimes it's subjective. Some people are using different ways of calculating that. But if you've got something you believe is right and you can pay less for it, in Joel Greenblatt's mind, it's a good place to put your money. All right, third one is unusual events create investment opportunity. He was talking here a lot about, here we go, here's the proper quote for you guys. Something out of the ordinary course of business is taking place that creates an investment opportunity. The list of corporate events that can result in big profits for you are spin-offs, mergers, restructurings, rights offerings, bankruptcies, liquidations, asset sales, distributions. In other words, when something unusual happens, when business is fine and great, there might not be an opportunity there. Yeah, sure, the market might, the stock might go higher and higher and higher. The point is, when there's unusual events out of the ordinary, people can't price it well sometimes, and you get this unusual pricing, big disagreements. So when you get bankruptcies, liquidations, asset sales, all the things I mentioned there potentially is opportunity. So from an investment perspective, if you become a specialist in one or two of those areas, and then when these things happen, you know what's good, what's not bad, what's good value, what's not good value, where that money might flow to, and become an expert in it, that might be a good sound way of investing in the markets. Okay, number 4, quality not quantity. Same if you're a short-term trader, swing-term trader, or an investor, it's all about the quality of the trade idea, the quality of the investment idea, not how many you can make. 1 or 2 great ideas can make your year, your decade, potentially, if you're investing long term, right? It's not about having a load of them, because you're going to have some losers in there and they're not all going to be great. Same if we're short-term trading as well. You know, the 1 or 2 very good trades in the week can make the whole week or the month. If you're doing hundreds and hundreds, unlikely they're all going to be that good. So a good one, that, and kind of it works all the way down, I say short-term, right up to long-term investing. For the quality ideas, invest your money, your hard-earned money, in the quality ideas, not in the frequency of ideas. Right, number 5, stick to investing in companies you know well. So he basically said, do you know, at the end of the day, it's a good idea for you to have a really good feeling about a certain company sector or certain company types and invest in those, because you can put more money into that investment rather than having, he was commenting like 14th, 15th favorite stock, putting money in that. You know, go into your your very favorite stocks, so the companies you know well, you know their business model, you know their challenges, you know the growth potentials, you know all this kind of stuff. Stick your money into those as opposed to the other ones where you're not really familiar with it. You don't know if it's going to be that good. Am I going to work and not? Put more money into the stuff that you know, which makes good sense to me. All right, number 6. Wait until an idea is so good it hits you on the head. Same with the trading world, guys. If an idea, an investment idea is so good and that it metaphorically hits you on the head and it just jumps out of the screen or jumps out of the paper, whatever it may be, and say, hey, these numbers look great. These are my rules. Check, 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 check. Everything's looking fantastic on this. I have to invest in this company. That's the one you should be waiting for. Same with trading. When things are lining up for you, your strategy is showing this is a great trade, this is absolutely perfect, I need to get involved in it. Wait for those ones and allocate your capital to that, your mental resources to that for a better payoff than just trading everything or investing everything that kind of looks okay and then having no resources left, either that capital or kind of emotional capital or mental capital to allocate to the really good idea because you're burnt out, you've lost all your capital, or it's all in other places when the really good one comes along and, like he says, hits you over the head, and I think he said like an anvil. All right, guys, let me know your thoughts in the comments section below. Investing rules and quotes from Joel Greenblatt. Take care, good trading and investing. I will see you in the next one. Goodbye.